top three things in my notebook this morning would be the euro versus the dollar, number one. Number two would be Russia, and number three would be the bond market, 10-year bond yields in the U.S. specifically. First thing on the euro, a not-so-funny thing happened on the way to the European Forum here, which is that the euro won't go down despite the Europeans cutting interest rates. Why? Well, because the dollar is going down. And in the face of that, what's happening is that this European policy is actually not working, which is good, of course, for the European people, because, again, a strong euro has correlated with strong European economic growth. So that's interesting to watch. I guess that would be point number one this morning. 1.34 on versus the U.S. dollar is the intermediate term trend line for the euro, and that currently is holding. Point number two is Russia. Now, you got a lot of issues developing here, as you might suspect, with oil making a series of lower long-term highs. Petrodollar and Putin power, of course, under pressure here. You have a Ukrainian government situation developing with the people basically saying, hey, look, we don't want to be dominated by Russia. We don't really like that at all. That's following through in terms of some social unrest, this week here in Kiev. I think that's an interesting to look at, with the Russian stock market leading losers in Europe this morning, down 80 basis points, but more importantly, down 3% year to date. So we'll be looking to short Russia on a bounce if we get it on the Russian trading system index. Point number three, 10-year bond yields, again, just banging around in between the range. So the range currently for the 10-year bond yield is trendline support 2.64% and 281 on resistance. So what I'm getting is a series of lower highs of resistance, which of course is bearish for yields and bullish for bonds, but I'm also getting a series of higher lows. So it's perfectly confusing, which I do think is going to ultimately drive volatility in both equities and bonds higher in the coming weeks and months. So we'll have to see about that. Interestingly, not surprisingly, equity VIX has been making higher lows despite the S&P 500 making a series of all-time highs. So those are your top three things.